Hello and welcome to the Daily Forex Report for February 23rd. We are looking at the US-Japanese yen pair. This pair closed lower during today's market action, came right in line here with some previous resistance and stopped there. We are looking for this pair to continue its move to the downside, possibly moving as high on a reversal up to 83.00, possibly moving down and hitting support around 82.15. Now looking at the Euro-USD pair, this pair closed higher during this past session, did create a swing trade opportunity. It's pretty steep though. We are looking for this pair overall long-term to be moving sideways, currently, or have a bias to the upside, currently moving strongly to the upside. Look for it to potentially go as high as 139.00, possibly as low as 135.66. Look for some resistance around 137.85 and look for some support around 136.76. Now the pound US dollar pair, it surged to the upside, almost tagged this high previous resistance, pulled back to close a little bit lower. Look for this pair to continue moving sideways, possibly going up to 163.47, possibly as low as 160.58. Look for some resistance around 162.75 and look for some support around 161.25. Now the US Swiss, this pair moved to the downside, hit previous resistance, pulled back just a little bit, is moving lower. Look for this pair to potentially go as high on a reversal up to 0.9448, possibly as low as 0.9226. Look for some resistance around 0.9395. and look for some support around 0.9295. Now moving forward, we have the U.S. releasing their durable goods for orders for January at 8:30 a.m. Eastern Time. Consensus on that is things have improved from a negative 2.3% to 3%. So that would be good news for the U.S. dollar if that comes out to be strong. Now we also have the U.S. new home sales for January being released at 10 a.m. Eastern Time. Consensus on that is that it's seen a pretty large drop from 17.5% to negative 8.8%, which of course would be very negative news for the U.S. dollar if the new home sales were to come out that low. Now, what am I looking for during this next session? Well, I want to show you something that is very interesting to me about the U.S. Swiss. This is on the month chart. If you notice here, that's pretty much all the history we have going back basically to early 1977, over 40 years worth of data there. The interesting thing about that, if you notice, there is a strong move to the downside. The other interesting thing is we are at a low basically that we've never seen before, and if you look on the week time frame, we've actually hit this and bounced once within the past couple of weeks. And let's zoom in a little bit more. You can see here we've bounced down and came back up, bounced down to it again and came up, and now we're back down to that same area again. So the odds are we'll bounce back up. However, if we don't and it moves lower, where can we potentially look for it to move and how far? Well, if you look at previous market history and go off of just strictly that, the previous market history, what has happened when we've hit a new area of a low, what has happened? Well, typically it bounces a couple of times, but once it does break through, it breaks through in a very strong way. You can see here we have a trend line, we have a low, another low, and another low. Once it does break through, it drops anywhere from 400, as it did here, after hit this low, came back up, and then dropped below it, at least on the month time frame. It came down about 400 pips there. Then we had a section here where it hit a low here, and then here, when it finally broke through to the downside, it dropped about 1,000 pips there. Then you can see this area and this area about the same as well. You can see how they kind of line up there. And on the break of it, it dropped another 1,400 pips. So what do you think is going to happen when this trend line is broken and it closes below it? Most likely we're going to get a drop in the neighborhood somewhere of 400 to 1,000 pips is what I would expect to see from a break like that. It's a strong area of previous support. Let me clean up this line a little bit. There we go. But basically look for it a break below that, and once we get it, it's going to drop pretty quick, and when it does, at that point you can capitalize on it. You may be asking, well, where would I put my stop loss? Where would I put my take profit? Well, let me zoom in a little bit. Okay, well, first off, you could take this low and grab a quick little scalp out of this. That's about 8 pips off of the one trend line. Off the other, which is pretty much you're looking at about 17, 18. Those are just quick little trades. But what I'd recommend you do is look for the previous area, which is right here. We have some congestion before it tested again, and then it came back up. So most likely this area of support, this area of resistance would be a good place to put a stop loss. You can see it here again. It did pull back in that same area. And for a several hundred pip trade, to have 150 or so stop loss between 150 and there's 150 right there, and a 200 pips stop loss on a trade, if we get a close below, basically if we get a close below the 0.9300 level, and somewhere in the neighborhood of 0.9295, for instance, look for it to move lower. We need to close below this now, not just market action breaking through it and then pulling back up to close above it, but actually closing below it. We could see it drop pretty quick. So keep an eye on this. I do believe we'll see it. It's going to do one of two things here. It's either going to move to the upside pretty quick, like it did here, or it's going to jettison on down. So keep an eye on this pair. Until next time, this is Jason Fielder. Good trading.